Chuck Harvine. I'm the Chuck in the Markets Up Chuck. And today's blog was titled "The Definition of Appreciation." And my favorite definition of appreciation that I heard a long time ago was that appreciation is when other people appreciate, or the greatest definition of appreciation when other people appreciate what you own more than you do. And the point is that a lot of times people panicked by market values will sell stocks that when they're actually extremely undervalued. And I think the real point is this: the market does misprice stocks from time to time. Monday and Tuesday of this week, I showed cases of significant overvaluation. Today, I'm going to take it the flip side and look at extreme cases of undervaluation. I'm going to start with Cognizant Technologies here, a very high-quality outsourcing company. As you can see, no debt on the balance sheet. I want you to notice that they have extremely strong earnings growth. And for this entire 13-year period, up until we got into the summer of 2007, where the stock price fell precipitously, the stock price very closely tracked earnings. But then it became extremely undervalued. The company went through the recession. It continued to grow the business. The business was healthy. They generated strong cash flows, and you can see the price rallied. The actual low was $17.26. And it closed yesterday at $41. You could have made 100% gain in this company since roughly February of this year, strictly based on the fact that it was undervalued. Ultimately, when the market is mispricing stocks, the key is to trust what the value of the company is, which is represented by this line. Another company that I think is a real great example of how powerful an opportunity undervaluation can be is Aflac. This is a 20-year chart on Aflac. I want you to notice that the stock price tracked earnings, which is the green line with the white triangles, or the blue line with the asterisk. And Aflac's case, they're almost exactly the same. But the actual value line is the green line. And I want you to notice that the stock price inexplicably fell. In other words, the market did not appreciate the value of Aflac here. And then since then, the stock has rallied from $11 low to over $45.72. Early in the year. So you can see that the stock is clearly coming back to value. This, in my opinion, is nothing but a mispricing of a really fine company. And then the last picture I'm going to show today is a company that I think is kind of a summary of both positions I've taken this week: overvaluation and undervaluation. This is Urban Outfitters. It's I guess a clothing manufacturer. No debt on the balance sheet. Very strong earnings growth, especially over the last 10 years. And I want you to notice, as the earnings began to accelerate here, the market got irrationally exuberant, and the stock got overvalued. Of course, it eventually came immediately back to value. Happened again shortly after that, back to value. Happened again shortly after that, came back to value. But this time it fell dramatically undervalued. It did have a little bit of a down year during the recession, as you can see here, but it was still a very profitable year. Not wasn't losing money or going out of business. And of course, the stock rallied from a low of $13.63 to over $32 as of yesterday's close. So you can see the strong rise in stock price to getting back to value. And now, interestingly enough, it's becomes maybe slightly overvalued. The point is, the way to appreciate what you own is to put your attention on the blue line here and the green line, or the value line of the company, and know what your business is worth. And then when the market's mispricing it, you can make sound and rational decisions. But undervaluation is critically important because if the stock is still doing well and the price is low, that's an opportunity. However, if the earnings collapse, then that's a different story. We might talk about some examples of that tomorrow. This is Chuck Carnvale saying thanks for listening. I look forward to talking to you again tomorrow.